unless you see a complete collapse in the currency, I suspect that this decay continues to happen. So the question is it a bad thing? And the answer is it depends. Because if asset prices increase faster than the dollar devalues, you're still ahead. You may not be ahead as much, but you're still ahead. And if you look at asset prices in the United States relative to asset prices anyplace else in the world, it is the flight to quality, which is to say that it is the thing that everybody wants to own. Part of the fact that until we run surpluses and or completely eliminate the debt, there'll always be a reason to be somewhat short the dollar. But the reality is that a lot of people still want to own these assets more than they want to own any other asset, and those assets are dollar denominated. And that's just sort of like the mathematical trend of it all. So unless there's some like cataclysmic collapse in asset prices, I think that this is just a thing that you have to deal with.
Days after President Trump signs new legislation, the crypto market awaits, as the US House's Crypto Week is set to begin on July 14th, where stablecoin and digital asset clarity will pave the way for the next phase in adoption.
You're really winding the spring, and you are creating high after-tax returns on capital, which increase productivity, which is what makes countries rich.
Today we have billionaire investor and CEO Chamath, breaking down what's happening in the market and why he believes President Trump and Treasury Secretary Scott Bessent just changed everything. He notes that factors like tariffs and recession fears are driving market volatility. And according to Chamath, a major market rally is on the horizon. Chamath has been an outspoken proponent of Bitcoin and has shared his perspective on its effects within the current economic uncertainty. He believes Bitcoin's value will continue to surge, and as a risk asset with a market recovery, Bitcoin will increase alongside it. However, Chamath emphasizes that uncertainty remains a critical factor. As the market remains in limbo, Bitcoin will face pressure in the short term. Bitcoin's price currently sits just over $108,000, up over 15% this year. There's potential for a sharp recovery in the coming weeks. Chamath shares more details and his predictions for the days and weeks ahead in his latest interview as the market braces for a massive shock. Drop your comments down below and subscribe if you enjoy the content we do here.
Chamath, any thoughts here on the dollar?
I think the dollar is devalued 50% in the last 35 or 40 years. So I think it's somewhat useful to look at any single couple of months in time, but this has been a one-way trade for a very long time. And it's probably important to understand why that is. And I think it generally has to do with the fact that the United States finances a lot of growth, and that has been the right decision. And you see that in the equity markets, you see it in real estate, you see it in hard assets. And so as long as that continues to hold in the push and pull, it'll be a slow bleed, but it's sort of like the carry of it all. And it happens. There's all kinds of other trades where you sort of pay a carry, and that's okay.
Is there a relationship you can explain to the audience between the stock market ripping and the dollar devaluing?
Well, I think the reality is that, if you think about a country that all of a sudden has to pay a tariff. So let's take the Vietnamese example that Freeberg said. Let's just say that they had to prepay 1 year of it, just to make the math simple so you can understand. They have to come up with $23 billion, I think is what Freeberg, the number that you said. So
yeah, like 26 billion on 130. Yeah.
How do you do that? Well, the first thing that you're going to do is you're going to sell dollar-denominated assets that you already own. And you're going to generate those US dollars, and then you're going to send it to the United States Treasury. So you may be selling bonds. So you would think, okay, well, that's not really good for asset prices. Okay. But then what you quickly realize is that all of that is far outweighed by the fact that all the rest of the stuff that you own, whether it's gold denominated or whether it's in local currency denominated, you want to actually go and buy these dollars because you want assets that are safe in turbulence and volatility. But if you have obligations that the Vietnamese government needs to fund, their central bank is probably deciding that they need to be long US bonds and fixed income. And other people who hold assets in that country are probably going to be, on a weighted basis, adding exposure to the United States while all of this stuff is happening. Why? Because you're seeing the balance sheet of America burgeoning and growing. 23 billion from Vietnam, tens of billions over here, tens of billions over there. It all adds up. So again, I think that this is like a very complicated multivariate problem, but the net takeaway is that the dollar devaluation is not something that's new. It is a phenomenon that has existed through market cycles for 50 plus years. It's a decay that has happened and will continue to happen. So the way that I think about it is there's a drag, but can the drag be overcome by the increase in asset values of the hard assets that are dollar denominated? And the answer is yes, and meaningfully so. And so as long as that's the case, I think you're going to continue to have a bid for equities. If all of a sudden the Mag 7 decided to delist and not be American companies, and all of a sudden showed up in the CAC 50 in France, yeah, we'd be in big trouble. But I don't think that's going to happen. And so as long as, there's American ingenuity and American supremacy again, and as long as those things are the same, there will be a constant bid for American assets. And that will keep the enterprise of America going for far longer than most people would guess. I think that this is why Buffett sort of speaks about this in these extremely long arcs, that you're always ultimately going to be on the wrong side of the trade betting against the United States. And it's probably important to then say, well, what would a boundary condition be? I don't think the boundary condition is the dollar. I actually don't think the boundary condition is the debt. I think the boundary condition is if something were to happen with the quality of the human capital inside of the United States and its inability to innovate, then we're probably in trouble. But even that story will take 50 to 100 years to play out. For most of our lifetimes, this is a safe trade because it's a winning trade.
For months, he's been emphasizing to investors that all the necessary factors are aligning now. He expects we are entering a period marked by parabolic upward moves in prices. But all that is about to change as the market gears up for a shock. Tariff fears are beginning to increase, and investors are hesitant. When thinking through the situation, he recently noted that Bitcoin may experience cyclical movements, even within a broader long-term downtrend. But the bigger picture still points toward major gains, despite all the factors in the market.
The reality is that AI is of national security importance. It is the tip of the spear of our ability to have technological supremacy. That is how we have economic supremacy. And so not governing it at the federal level, I think, is a mistake. And it makes as much sense for states to legislate AI as it would make sense for states to have competitive armies. It doesn't make sense. There are certain things that are just so fundamentally primary to American supremacy and safety and security that it needs to be regulated at the federal level. And I think AI needs to be at the top of that list. So I was disappointed that we weren't able to see the forest from the trees here. In Tennessee, there was a lot about copyright ownership related to musicians and their content. I get all of that. Those are legitimate things that need to get ironed out. But I think that it could have been done in a federal framework. Not having it, I think the risk is that if you have 50 different sets of regulation, and it won't even just be 50, as Friedberg said, it's going to be, all kinds of pet organizations that pop up in all of these states. What happens? I think what it does is it slows down startups and smaller companies who won't have the economic heft to fight these regulations or to work with them or to figure it out. And it'll advantage a handful of incumbents. And the problem with that is that our incumbents aren't yet mature, and this industry is still developing. So I think this is one of the unfortunate parts of what is otherwise a pretty reasonable bill.
So we're definitely not getting an increase, according to the sharp money. And I think Powell said he would have cut if there weren't the tariff, curveball thrown into the system, which is, I think, what most of us thought. And Chamath, you talked about all this sideline cash sitting there in money market accounts, markets at an all-time high.
So here's the crux of the issue. I think this is the intersection of a lot of really interesting things happening right now. You have Meta giving individual human beings $300 to $500 million packages like their NBA first team all-stars. OpenAI, their revenue numbers just leaked. They're forecasting $13 billion in 2025, spiking to $125 billion in 2029. You have Anthropic. Their revenue by 2027 is forecasted to be about 35 billion. So what does all of this tell you? To be honest, it's telling me that the state of software is a little unclear, meaning I actually believe the OpenAI and Anthropic numbers. I understand why Facebook is now spending as if there's an existential risk. And I think the existential risk is that these models could be so foundational to how social experiences and work are done that it starts to absorb a lot of other stuff. So the question is, how do other tools fit into a workflow when these things become so central to how people both enjoy their free time as well as spend their productive time? And I think when you look at that, you look at Figma, what I would say is on the surface, in the absence of these AI businesses, I would say, man, what a gangbusters business. Growing by 40-something% a year at this scale. Their adjusted, I think, operating margins are 18%. I don't like adjusted because it's adjusted for stock-based comp. I don't know what it is when you add that back in. But the point is, it's a phenomenal business. The question that I think the institutional investor will have is, what am I buying? And does this revenue growth sit adjacent to core model revenue growth? Because the big question that we have yet to answer, and this is not a Figma specific issue, it is an industry-wide issue, is how much do these foundational models absorb into what they do for what you pay them? And I don't think we know the answer to that yet. Then all of this high-level software is free and clear, right? It's in the safe zone. But I think the problem is we don't know that that's the case, you know? And so I think in the IPO, what you're probably going to see is people approach this company the same way that they approach all non-core AI IPOs, which is that it's a business that you love to own for a year or two. But if there's a depression in valuation, it's because people cannot underwrite years 3, 4, and 5.
The crypto market is poised for a meteoric surge in prices. He illustrates Bitcoin's current undervaluation, drawing in investors and enticing speculators eager to ride the waves of September's price fluctuations in pursuit of profits. Chamath's outlook is fueled by the impending wave of mass adoption, which he believes presents an unparalleled opportunity to get in on the action. He sees the race toward a 6-figure price target. What's more, he highlights the intriguing historical pattern of Bitcoin's value surging 10x. He asserts that the promises made by the Federal Reserve and central banks have been hollow, leading to excessive money printing and a proliferation of poor investments. And with the aftermath of the recent inflation surge, Chamath says this will not lead to a return to the status quo. He argues that the economy has spun out of control, with the US facing a mounting debt crisis. Kaiser presents two bleak possibilities: hyperinflation or a deflationary depression. In either scenario, the overall quality of life deteriorates. He notes the absence of viable solutions, indicating an even greater severity of the crisis. Interestingly, he points out how political figures are discussing Bitcoin as part of a potential solution, marking a shift towards a Bitcoin-centric financial framework. What do you think about Chamath's prediction for Bitcoin, the crypto market cap, as well as the institutional capital pouring into the space? Comment down below.